Video we're going to be dealing with dividends, right? How to deal with dividends. So in our previous videos we went over an introduction, we went over the issuing of shares, we went over the buyback of shares, and now we're going to look at dividends. So what are dividends? Dividends are a payment that are made to who? Made to our shareholders, right? So it's paid to the shareholders. Remember, the shareholders are people that buy shares in the business. So in return, what does the business do? The business gives them a payment called dividends. So a business is the one that decides whether they want to pay dividends based on the profits that they've made in that year. So we have two types of dividends. We have an interim dividend and we have a final dividend. So what is the difference between these two things? The difference is the timing of these two things. It's the same thing, just paid at different times. So your interim dividend is paid during the year, usually after the first 6 months, so halfway through the year. That's when your interim dividend will be paid, right? Usually, it doesn't really have to be after 6 months. It can be any time within the year, right? It's an interim dividend. Then your final dividend is paid at the end of the year. At the end of the year. So that's the difference. It's still the same thing, still dividends, just that the interim is paid during the year and your final is paid at the end of the year. Remember, with the 6 months, I said usually, not all the time. As long as it's during the year, it's called an interim dividend, and the final dividend is paid at the end of the year. So your financial year, if your financial year ends on the 28th of Feb 2025, then if that dividend is paid on that date, then it's called your final dividend. Now, how do we account for these two things? So we need to understand the difference between declared and paid. What is declared? Declared means that something has been promised. We have promised that we will do something, and paid is obviously means that it was paid. So the difference between these two things will help us understand how to account for the dividends. If something was declared, it means that it was promised to be paid. It's not yet paid, but it was promised to be paid. So whenever a dividend is declared, the accounts that would be affected because it was promised, it's not yet paid, would be your what? It would be your shareholders for dividends, and your dividends account. And your shareholders for dividends is a liability, right? It's a liability account, and your dividends is an expense account. So the shareholders for dividends is a liability account, and we use a liability account because these dividends have been promised to be paid. So if you promise something to someone, then it means that you owe them. So we need to have a liability account for the people that we owe. So that would be the shareholders for dividends account. And then the account that would be the contra account would be my dividends, right? Then when your dividends are paid, right, your dividends are paid, the accounts that would be affected would be obviously your bank account, because we pay, right? And bank is an asset. And then the other account would be your dividends. You're paying for dividends, and dividends is an expense. So that would be the difference between accounting for something that was declared and something that was paid. With your declaration, remember, it's a promise, it's not yet paid, so you can't use bank. You need to use a liability account, and that liability account would be shareholders for dividends. Then the contra account would be dividends. Then whenever you pay a dividend, it is now paid, so your bank account would be affected, and then the contra account would be dividends. And that's how we account for dividends. Then remember that your dividends will also affect your what note will it affect? The notes that it will affect is your retained income note, where we will see in the retained income note we have our interim dividends and our final dividends.